When you look at markets overall, how much do you look at earnings and how much do you actually look at their forecast going, into the future, which could be concerns about trade, which could be concerns about monetary policy?
You have to look at lots of different things. I think when earnings matter most, it's the revisions to earnings that people tend to associate with actual market-moving events at the stock level. So we will look at earnings revisions to decide whether a particular region of the world is more attractive or less attractive. And so, for example, over the last 6 months, European earnings revisions have been downgraded quite consistently, mainly due to euro strength. And if we were to see anything change in the direction of the euro, that would be a big uplift to the European markets.
Do you see euro changing?
I think it kind of depends how soggy the summer is. I say that because in London it's been pouring with rain, it's very cold. There's been
We're
snow
also
on the
miserable.
hills. But it feels like the sort of summer markets have come early because the 1st of May this week is usually the beginning of that sort of range trading, soggy, sideways stock market. We've seen it already since February. And I think what's going on is there is a bit of a peaking out in global growth at high levels. And that means that earnings forecasts are seeing some downward pressure, and that's really what this volatility is about.
So it's amazing. 2 months ago, I was asking whether the German economy was overheating. Now I ask whether the German economy has peaked.
And it's not just the German economy, because when the correction started, you remember it was pinned on an average hourly earnings number in the US, the idea that the wage inflation was out of control and the Fed would have to slam the brakes on, and that's why the stock markets were crashing. Well, the next month it ticked back the other way and no one paid a blind bit of notice. Next sell-off was about trade, then it was about geopolitics and big tech. This sell-off, the soggy period we've seen recently, has been about negative earnings guidance. And it's quite normal, actually, when you get a peaking out in global growth, for the markets to turn volatile. No one knows why for a while. And then with hindsight, everyone looks back and goes, 2017 was a bumper year for growth everywhere, and it's cooling off, not necessarily collapsing. If it collapses, if growth really weakens, which is not what I'm expecting, then I think the dollar will strengthen again, and the euro will weaken, and that will help European earnings. I'd expect more of a range trading.
Does it mean, so actually you could look at it two ways, does it mean that monetary policy will be tempered, right? Because chief executives are concerned about their future, and so the central banks will look at the same worries, or will they hike more aggressively because they're worried about a sharp downturn or even a recession in 18 months, and they want to have the tools to deal with it?
I think that last point you made is the reload thesis, that by hiking rates a lot now you can cut rates later. I don't buy that at all.
Maybe not a lot, but a little.
I think that, I do think that actually the fact that growth is beginning to show signs of cooling off is a good thing in terms of the longevity of the business cycle. Right. Because if you saw 2017 repeated and repeated again, interest rates would go up until something cracked and you probably would see a recession. The fact there's a cooling off may well mean that central banks actually slow down their rate hikes. We've already seen the Chinese easing policy, and it says to me actually there could be another run at extending the cycle into 2019. So I'm not pessimistic. I'm buying dips and selling rallies.
Well, you're not optimistic.
Overweight equities. Well, I'm overweight equities, but I think basically we might have to wait for a while for this sort of cooling off to feed into markets and for central banks to react before we get the next big up move in stock markets.